other sort of regulatory driver that I thought was quite notable was the Mansion House Compact, which is the update from the previous Mansion House Accord, and it's trying to encourage some local authority and pension funds to invest more in the UK and more domestically. And the phrase they've used is to invest in private markets, but private markets includes AIM. So do you think this could be the sort of white knight that comes to rescue AIM? Because if you're running a county council pension fund, the AIM companies are obviously listed. You can see the price every day. They're very transparent in the way that they report. Is that not more appealing than maybe going down the private equity route where you're potentially locked in for a number of years?
Yes, I mean, yeah, but pension funds have always been aware that they can take liquidity risk if they need to, so they don't mind being locked in particularly. But having said that, private equity feels like a pretty crowded trade, and there is this, I think policy blindness at high levels where it seems to be, private assets are just fine. They're as good as listed assets. They're absolutely not. When you take a company private, the first thing you do with it is you stop it paying tax. And
Hmm.
we've been looking at a company that the old Melrose team are buying this morning. They just announced a deal. It's a US company being bought out. They're buying it out of private equity. Funnily enough, that company is loss-making. Why is it loss-making? Because it pays a massive amount of interest on very high leverage. That's the first thing you do in private equity.
Hmm.
Um, it's terrible for government, actually, and it's terrible for, for the general financial system and the sort of public finances to let too many assets just go into private hands, into private equity, because your corporate tax receipts get killed. And I'd say this the most consistent feature of any company gets taken private is the next year it'll get bound up in this, that, and the other, and taken to some offshore holding company, and you'll never see any tax revenue from it again until it gets sold. So it is the most surprising thing and the most slightly frustrating thing about this Mansion House Compact is the slight obsession with private assets. And I think actually the focus really needs to be on protecting public ownership of companies and the whole concept of a stock market. So it's fantastic news, though, that the sort of slight kind of get out here is that AIM qualifies as private assets. And we've just got to hope that the pension funds who probably don't really want to stick a load of money into private assets, if it's not what they were doing already. But the intention here should be about getting them to invest in the UK. And somewhat astonishing to me that the government's pressure here is to invest just in private assets, and only half of them need to be in the UK. I don't understand that,
Hmm.
but even half of them coming into the UK and some of them coming into AIM, the market is really on this kind of it's like dry tinder. It don't take much to have some really good sparks appearing and small sparks changing the momentum in the market. In fact, we're already seeing it, and
Hmm.
that pension fund that's already invested in UK assets has made a difference. It's tangible. I think everyone's already noticed it.